COCOCO reports a Q268 profit of 77 million baht, up nearly 20%, driven by strong growth in coconut milk, coconut water, and pet food products. Hello and welcome to Insight AI Brief Set Thai. Today we're talking about COCOCO stock. Before we dive in, please like, share, and subscribe. Okay, let's unpack this. We're looking at the latest performance for Thai Coconut Public Company Limited, or COCOCO. What's the headline from their Q22568 results? What should you, our listener, really know about their profit and revenue growth?
Right. What's pretty fascinating here is just how strong that Q2 performance was. COCOCO reported a net profit of 77.8 million baht. That's a significant jump, 19.94% increase quarter over quarter.
Almost 20%, wow.
Exactly. And their total revenue also saw really robust growth. It hit 1,803.69 million baht. That's up 16.33% from the previous quarter. And if you look year over year for the same quarter, it's still up 13.58%. So solid growth there.
That's impressive growth, definitely. What products or maybe strategies were really driving those numbers?
Yeah, so this growth was largely driven by increased sales in their coconut water segment. That continues to be really popular internationally.
Right, coconut water is huge.
It is, especially across Asia and the Americas. But it wasn't just coconut water.
Yeah.
The company saw, continuous growth across its coconut milk, its coconut water, and its pet food lines.
Okay.
And if we kind of connect this to the bigger picture, it really reflects how effective their marketing strategies have been. They're focusing on expanding their customer base, increasing distribution channels, especially through retail.
Makes sense.
Now, for the first 6 months of 2,568 overall, total revenue was 3,353.82 million baht. That's up 12.61% year over year. However, and this is important, their net profit for that whole 6-month period actually decreased compared to last year.
Oh, okay. So strong Q2, but the first half overall saw a profit dip.
Wow.
Why the difference?
It primarily came down to higher cost of sales, specifically the price of coconut raw materials. Yeah, the El Nino phenomenon, that climate pattern. It significantly impacted those raw material costs, drove them up. And that affected the profit margin earlier in the year.
Got it. So, higher costs eating into profits despite rising revenue. What does this all mean for their, let's say, financial health overall? Are there any key metrics, PE, EPS, PBV that stand out, or any maybe concerns about their stability?
That's a really important question, the stability angle. So while the sources we looked at didn't detail the specific PE, EPS, or PBV figures for Q2 2568,
Okay.
Those metrics people use to gauge valuation and profitability per share, we do get insights into their financial management approach. The company is actively focusing on risk management, on increasing production efficiency, strategic international tax planning, and just overall cost management, holistic cost management.
Proactive.
Exactly. And that's crucial for long-term sustainability. Gives you a sense they're trying to manage these pressures.
That sounds promising. Okay, let's talk dividends. You mentioned a current yield, but I also saw a note about no free cash flows. How do those two things fit together?
Yeah, that's a really critical point, the no free cash flows part. Because, look, they have a current dividend yield of 3.64% and a payout ratio of 81%, which technically is covered by earnings.
Okay.
But ideally, sustainable dividends come from a company's free cash flow.
Yeah.
That's the actual cash left after all expenses and investments.
Right. The cash they actually generate.
Precisely.
Yeah.
So when a company doesn't have free cash flow but is still paying dividends, it often means they might be funding them some other way, maybe debt, maybe selling assets. And that's not always sustainable long-term, for consistent dividend growth.
Yeah. That's a red flag, potentially.
It's something to watch.
Yeah.
So even though analysts are forecasting a future yield of maybe 5.9%, it raises that key question for you, the listener. How are those payments actually going to be sustained if free cash flow isn't there to back them up?
That's a crucial point for anyone considering this stock. Definitely food for thought.
So, okay, we've got a handle on the current financial picture, the good and the questionable. Let's shift gears. Where are they heading? What are COCOCO's key operational plans, their future outlook?
Yeah.
Especially around product growth and any factors that might influence it.
Well, they seem to have a pretty clear strategy. Operationally, they're emphasizing expanding that customer base and the distribution channels, particularly through retail partnerships.
More shelf space.
Basically, yeah. And they're very active in marketing, too, going to trade shows, exploring new markets, trying to strengthen those customer relationships. A big part of their future growth strategy seems to be innovation, adding value to Thai agricultural products, and also, importantly, elevating their production standards to meet international requirements.
Okay, standard stuff, but important. Now, here's where it gets really interesting for me. What are the big drivers for the growth they're anticipating? And conversely, what challenges might they face? Right, so there are several strong positives lining up. The demand for their products, especially that coconut water, is expected to keep growing, particularly in the Chinese market, which is huge.
Massive, yeah.
The pet food business is also expanding, both in Thailand and internationally. That's another promising area. And we're starting to see maybe some easing in those coconut raw material costs. Prices were around 20.09 baht per fruit back in June. That's a bit of relief after the El Nino hit.
Okay, some cost pressure easing. Good.
And then the major strategic move, that new factory in the Philippines. It's expected to start commercial operations in Q1 of 2569, so early 2026.
The Philippines factory, right. Tell me more about that.
Well, it's significant. Production capacity is planned to be about half of their current Thai capacity.
Wow, that's big.
It is. And it's projected to improve their gross profit margin in 2569 because they'll get access to lower cost raw materials there, and it should cut down on transport expenses too.
So closer to cheaper coconuts, basically.
Essentially, yes. And they're also doing things like installing solar rooftops, these cost reduction projects that also tick the sustainability box.
That Philippines factory sounds like a potential game changer then, securing supply, cutting costs. But, okay, every growth story has potential bumps. What about headwinds?
Exactly. There are always challenges. On that front, there was concern about a U.S. import tax, 19% on some Thai goods.
Right, I remember hearing about that.
Yeah. But COCOCO assessed it and believes it won't have a significant negative impact on their competitiveness. They think it's manageable through, careful pricing and cost structure planning.
So they think they can absorb it or pass it on?
Seems to be the plan. The El Nino thing, as we said, definitely impacted costs in the first half. That hurt profit. But they are managing that risk, apparently, by pre-reserving materials, monitoring the situation closely.
Okay.
Then there are broader market challenges. A research firm highlighted things like supply instability for coconuts, generally in Thailand because of climate change, aging plantations. That could affect consistency.
Long-term supply issues.
Could be.
Yeah.
Plus rising costs for sustainable farming, and of course international competition is always there. But COCOCO's proactive strategies, like that Philippines factory, are aimed squarely at mitigating a lot of these risks. Oh, and it's also worth noting, they were recognized on the ESG emerging list for 2024 by the TaiPad Institute.
ESG, environmental, social governance.
Right.
Why is that significant here?
Well, it's more than just a feel-good thing. ESG recognition signals a commitment to sustainable, ethical practices. And increasingly, that translates into lower risk profiles, better operational efficiency, and it attracts certain investors. It speaks to long-term stability, which is relevant given some of the other points we've discussed.
That ESG nod is definitely a positive signal for their long-term view. Okay, so switching to the investment perspective now. What are the analysts saying about COCOCO? And what's the story for shareholders thinking about returns, dividends?
Yeah, analyst perspectives are interesting. We've got a couple here, both leaning positive. Yuanta Securities, this was back on July 7th, 2568. They upgraded their recommendation to buy. Target price of 7 baht by the end of 2569.
Okay, a buy at 7 baht.
Right. They're anticipating profit recovery in the second half of this year, 2568, and they think the stock price might have already priced in some of the bad news. They see potential for export stocks like COCOCO to bounce back.
Makes sense. And the other one?
That was DAO Securities. As of June 12th, 2568, they also recommended buy, but with a significantly higher target price, 11.50 DOT.
11.50? Big difference.
Yeah, quite a range. DAO's optimism seems driven by expected strong profit growth in Q2 and Q3 of 2568. They're forecasting full-year profit growth of 30% for 2568, and then an even stronger 44% for 2569.
Those are some bullish forecasts, especially that 44% jump. Okay, so analysts seem positive, albeit with different targets. How does the dividend situation look now, especially thinking back to that free cash flow issue we talked about?
All right, let's circle back to dividends. Currently, the yield is 3.64%. Analysts, as mentioned, forecast it could potentially hit 5.9% over the next 3 years.
Potentially.
The payout ratio is 81%. So on paper, earnings cover the dividend. But, and these are important buts, the company's only been paying dividends for less than 10 years. And historically, those payments have been volatile. They've actually fallen over the past 2 years.
Volatile and falling recently.
Yeah. And this links directly back to that free cash flow point. No free cash flow makes you question the sustainability and reliability of those payments, even if earnings technically cover them for now.
So the yield looks okay, maybe even good if forecasts hold, but the history and the funding source raise questions.
Precisely. Their current yield is higher than the bottom 25% of the Thai market, but it's lower than the top 25% and the food industry average. So yes, they pay a dividend, but there are definite nuances around consistency and, well, how they're actually funding it that you need to consider.
Definitely adds complexity to the investment case. Okay, finally, let's touch on the stock's recent market action. Now, I know our sources didn't give us detailed technical charts, support, resistance levels, patterns, but what can we see from its latest price movements around, say, early August 2568? What does that tell us?
Yeah, no detailed charts, unfortunately. But we do have some snapshots. As of August 13th, 2568, the stock was trading at 7.85 battle. It had actually seen a daily decrease that day, 0.405, or about 4.85%.
A down day.
Yeah. And looking back a bit, on July 7th, 2568, the price was 7.35 battle, and it saw a slight increase that day. So we see these specific price points, we see the daily ups and downs. It shows that even with a potentially positive long-term story, short-term fluctuations happen.
Standard market volatility.
Exactly. The available data really just reflects the price at a specific moment and those general daily moves. Investors focus on the fundamentals, the strategy we discussed. They often look beyond these day-to-day changes.
Right, focus on the bigger picture.
Which leads us to maybe a final thought for you to consider. Given COCOCO's growth in things like coconut water, the pet food expansion, that big strategic move of the Philippines factory, how might its commitment to ESG principles, the thing recognized by Thaipat, ultimately influence its long-term financial stability and appeal to investors, especially when you have to balance that ESG focus against those very real short-term challenges like the raw material costs we saw and that critical question around generating free cash flow for sustainable dividends? How do those pieces fit together for the long run?
That's a really great question to leave our listeners with. Balancing those immediate pressures with the long-term strategic vision and sustainability efforts, it's the core challenge, isn't it? We hope this deep dive has given you a comprehensive and insightful look into COCOCO's journey. Finally, if you have any other stocks you'd like us to cover, please do let us know. Don't forget to like, share, and subscribe to support our team. Thank you for joining us.